Hello D-traders! This busy trading week is finally coming to an end. It literally became a turning point in terms of interest rate decisions by the world's central banks, price movements of currencies and assets, and investor sentiment. For certain regulators, lifting interest rates has already become a process rather than a one-time event. So let's find out what was the reaction of the market to the decisions. Commenting on the 0.75% rate hike on Wednesday, Fed Chairman Powell said he does not expect such moves to be common. He also hinted at the possibility of a 0.50% rate hike at the meeting next month. According to Mr. Powell, a lot will depend on external factors the Fed cannot control. Meanwhile, other world central banks followed suit and started lifting interest rates. Thus, on Thursday, the Bank of England announced its fifth rate increase so far, and the Swiss National Bank hiked rates by 0.50% for the first time in 15 years. The US dollar index fell to the 10-day low of 103.41 as the world's central banks were raising rates and recession risks in the US were growing. The dollar tumbled on Powell's somewhat ambiguous words like dependence on economic data, foggy outlook, and so on. However, the greenback, along with the US government bond yields, managed to recover during the Asian session on Friday. As a result, the US dollar index climbed above the mark of 104 to trade at 104.28. Crudes are again on the rise and are likely to move in the range between 132.18 and 134.59 today. Analysts see USDX falling to 102 in the near term. Its rally may then pause until fresh economic CPI data comes in. As for the Japanese yen, its dovish central bank kept interest rates unchanged at the meeting today, so the yen continues its bear run post-Bank of Japan's decision. Thus, the currency plunged to 134.50 from its two-week high on a Friday and keeps being bearish against the dollar. Notably, USD JPY traded mixed after the Bank of Japan has announced the decision. The pair advanced by 1.89% to 134.64, dropping to 132.42, and then climbed to the current levels. During the Asian session, the pair traded in the price range of 103.83 and 104.54. The Aussie dollar is moving under the influence of the recent plunge on Wall Street. In fact, the Australian dollar has been in correlation with the US stock market lately, which has already tested the bear territory. In addition, as the Asian stock market also tumbled, the Aussie dollar descended to 0.6992 during the Asian session. The AUD USD is on a losing streak on a Friday, moving in the range between 0.6970 and 0.7055. The Reserve Bank of New Zealand may well raise interest rates by 0.50% in July and August and by 0.25% in October and November. So, by the end of the year, the rate could peak at 3.5%. According to the latest data, New Zealand's manufacturing PMI grew to 52.9 in May versus 51.2 a month ago. In this light, the Kiwi also strengthened. During the Asian session, it started to consolidate in the range and traded at 0.6339. It has been our wrap-up of Asian trade. We are closely monitoring developments in the market to keep you updated. You may leave your comments down below. Thanks you for your attention and see you in our next video review.